managing member of HC Technologies, which is a Chicago-based proprietary trading firm. However, a bulk of my career was spent at Tudor Investment Corporation. For those who don't know, Paul Jones is the founder, perhaps the most successful macro trader of a generation. I got to work and learn from him. And what's actually more impressive about him is not only his trading prowess, but the work he's done philanthropically with Robinhood and other things in New York, fighting poverty, and other things like that. I thought, given where you all are as interns, it might be interesting to hear how I got my start at Tudor. I worked on the floor of the COMEX in New York. I was a clerk, a runner. I worked doing the arbitrage for a big trade house. And I really didn't have the money to go to become a trader because I couldn't afford a membership. So I went to law school at night and spent 4 years going to law school at night. And at the end of that time, I received a $100,000 offer from a prestigious New York law firm. At the same time, Paul Jones had recently started up his small hedge fund with about 10 people, and he asked me to join in. He offered me $30,000 to work for him, but he did say I'd get the opportunity to trade, and I was cocky enough to think I might be successful to do that. So I turned down the law firm, I joined Tudor Investment, and of course, what happened the first week I went and started trading. I lost money every day, I lost money repeatedly, and I said, oh my God, this is the worst decision I've ever made. I'm broke, I can't do anything, I've turned down the legal job, and look what I'm doing with this small band of traders from New York. However, it all turned around. It worked very well. I was one of the original partners at Tudor, and the firm grew to manage approximately $20 billion, have offices in 5 countries, and has a very successful time there over the last 20 years when I was there. I learned a lot about trading from Paul, and I think that for all of you who are interested in trading, it's a very great field. The thing I liked about it is that I could really vote and cast my vote on the events of the day. You know, whether you think what's going to happen with the euro in Greece. When do you think the Fed is going to start raising interest rates? These are all things that you can participate in. You can match your wits versus everybody else in the marketplace. And you can win. You can beat institutions. You can beat Paul Jones. You can beat other traders. And if you have the talent and the skills, you can become successful. You also get a grade every day from the marketplace. You don't have to worry about peer evaluations that might not perceive to be fair or other things that happen that cause you to not do as well. You'll get a grade every day, and it'll be a harsh grade, but it'll be a correct one. I've seen many traders in my career, and a lot of them have been very successful, but many more of them, it hasn't worked out. For many of them, I think that they didn't have the characteristics that I have seen that they need to be successful. One of them is the analytical skills to be able to process lots of information. The analytical skills to understand the fundamental things that are going on in the marketplace. To understand how to evaluate risk, to have superior risk management, and to have flexibility. So I just want to talk a little bit about a few of those items. While at Tudor, I started there in 1987 in May, and probably like a lot of you, had little experience in the marketplace, had worked as a clerk and done some arbitrage, but was not sophisticated in the ways of trading that Tudor was engaged in. As I walked around the firm in May and the summer of that year, Paul was talking about the crash that was about to come, and the firm was taking money out of banks. They thought the banking system was going to melt down. And he had this view that in 1987 the market would crash, and he executed that trade. He made 200%, and he's really never looked back. The firm grew, and he's been eminently successful. Another hallmark of Tudor has been its risk management. Now, if you don't have disciplined risk management, you're not going to be in the game. One of the things that happened to me when I started, I was trading metals for Paul, and then he said, you're in New York, you're sort of a big fish in a small pond. Why don't you go out to Chicago? So after a while, he sent me out here, and he said, but you're very cocky. We'd like you to be very disciplined, to trade very small, and build up your account and take it from there. And I actually listened for a little while. Things went pretty well for the first few months out there. And then one day I said, well, I'm doing really well. I'm going to let it rip. I had a very big position on. Market was going my way. Market was going down. And then 10 minutes into the end of the day, a news item came out that sent the market roaring up about 0.5 point. Of course, I sold more and did not exercise any risk discipline. And the market kept on going up that day. I think I didn't turn in my trading cards immediately. There's somebody who saw that. And I was walking around Chicago, and somehow some members of the firm finally get a hold of me. Paul told me that I had 2 hours in the night session to liquidate the position, which I did. I begged him to let me stay longer in it because, of course, I knew I would be right. And what happened? I got out, the market stayed right there, and I went home. The next day, the market up on a point lower. I would have been very successful, and my first phone call was from Paul. He said, I still want you to know that you're still lower than shit on the ocean floor, whale shit on the ocean floor, no matter what has happened in the marketplace. I think that his next line was, if you ever lose more than $15,000 from me, we'll always be friends, we'll never do business. So having to go back into the bond pit, trading large positions and not losing that money was very difficult. But that was in the early 90s, and I actually never looked back. And that was a tremendous lesson for me. I never violated my risk management again. And generally speaking, traders who work for me, traders who work for Tudor, violation of risk management, it's generally a death sentence. Sometimes you get one more chance, but that's usually about it. Another thing that I see in traders that are successful is the ability to be flexible. A lot of times people, for intellectual reasons, whether it's sometimes they've made a lot of money on one side of the market, they usually rigidly stick to one side, whether they caught a big decline in gold that made them a lot of money, and then every day they go in with the same position. So I think you have to demonstrate a lot of flexibility to be successful. So I think that if you're not willing to have an execution plan, not willing to have disciplined risk management, and you're inflexible, it's probably not the field for you. Probably better off practicing law or perhaps being an accountant. One of the things that's going on now in our space is that at our firm, HC Technologies, we're a large technology firm. We have microwave lines like a lot of the Chicago firms, a lot of proprietary trade firms. All the time frames in trading have now compressed. It used to be longer time frames. Now it's, sub-microsecond. And I guess as we approach the speed of light, perhaps there might be room for a different type of trading. And what we've done with Tudor Investment, who has partnered up with us with a company called LaunchPad, is we're now seeking to find new macro traders. We see that in our space, some of the most famous traders in history, Stan Druckenmiller, Bruce Kovner, George Soros, and Paul is getting older, are now stepping aside. The returns in macro funds aren't what they used to be, so now everybody's getting out of this space, and it's time for us to actually enter in this space. We don't see a lot of new macro traders. We don't see a lot of funds supporting it. So what we're doing at a company called LaunchPad, which is a joint venture between Tudor Investment and HC Technologies, is we're out there looking for young macro traders. We're looking for those who have, at this time, like a 2 to 3 year track record, who display the skills that we're looking for, who may be successful. At a firm like Tudor, it's hard for people to make an impact if they're not managing $100 million. So the acquisition costs of traders are very difficult. Obviously, you can imagine if somebody's trading that large money and they're not successful, then it's a large number. At a firm like ours, where we have smaller traders trading high frequency, trading small amounts, it's easy for us with our risk management systems and with our execution platforms to monitor this risk and to hire smaller traders. So what we're doing right now is we have an effort where we are in the marketplace looking for small traders to sort of find the next generation of macro talent. And the response has been pretty overwhelming so far. For 5 spots that we're trying to fill by September, we have 300 resumes. We're seeing people from very different places come. Obviously, the banks aren't involved in proprietary trading anymore, so we see people from there. We have people from Chicago proprietary trading firms. We're also seeing people who are coming in from other hedge funds who, because of trouble raising capital or performance, are looking for another place to go. So we've been very excited at the type of candidates we see. And the other thing we're finding is that now that we're interviewing people, we're finding that there's a real hunger for mentoring. That young people like yourselves or people who have some experience want to be mentored by other traders. And the other great reaction we've got is the Tudor portfolio managers are actually interested in doing it. So we're seeing a real match out there because I think as our point of view is that as people are getting out of the macro space, as a trader, it's a good time for us to get in it. And as we compress at the speed of light, that perhaps some other firms should look at changing time frames and where is all the risk can be held. So I guess in closing, I would say, making that trade for myself at Tudor was sort of the best trade I ever made. I went out to be a partner at Tudor. I went out to trade in the Chicago markets, serve multiple terms at the exchanges on the board of directors, and I hope all of you can make that hard trade in your career, and hopefully we'll see some of you down the road at HC Technologies or LaunchPad. So thank you.